after several years when African governments were excluded from the global debt markets, you obviously saw that they managed to issue again. So Cote d'Ivoire, Benin, and importantly Kenya all came back to the Eurobond market. And at the same time, they reached an agreement, remember, in Beijing in September, where Chinese lending looks like it's set to increase again to Africa. So the finance came back. And then secondly, you had this huge return to orthodoxy that was alluded to actually in some of your earlier interviews this morning, whereby you saw these big devaluations in Egypt, Nigeria, and Ethiopia, and this return to monetary orthodox policy, right? And that, I think, is the difficult adjustment that we've been through in 2024, which now, as you would say, sets the benchmark for where we go in 2025.
But David, I mean, each of the currencies, if you take a look at it across the continent, the currency moves were happening for very different reasons. Do we continue to see much of that volatility, especially if you consider the strengthening of the U.S. dollar? How do you think currency moves on the continent are going to be defined?
Yeah, so I'm not sure that there is such a big difference, right? And as an economist, I don't really buy into the idea that the US dollar moves actually impact much, right? The scale of the moves we're seeing in Africa last year and in recent years are well beyond euro dollar moves. Now, essentially what happened was that as Africa came out of COVID, the continent was haunted by this specter of default. And essentially that default did happen. We saw Ghana and Zambia default. Now, when a country defaults, what tends to happen is that confidence in the currency disappears, and therefore the currency comes under a huge amount of pressure. So it starts with the kwacha, then the Citi comes under pressure. The fear of the Kenyan default put the Kenyan shilling under pressure. Then some central banks, such as Egypt and Nigeria, fought against that fear of default, but eventually they realized that they couldn't fight against it and had to allow the devaluations to happen. Now, essentially, we've moved on now. So the fear of default is behind us, and hopefully that should start to ease the pressures on the currency going forward, along with the return of capital flows.
Where do you see those capital flows flowing to? Is it going to be a lot? I mean, we were talking about Ethiopia before. Prime Minister Abiy Ahmed is trying to open up the economy. Will we see the same countries really getting much of the FDI?
I mean, there's different ways of thinking about capital flows, whether you're worrying about FDI or whether you're worrying about lending from the World Bank or the IMF, or even from the private sector through the Eurobond and through investors buying domestic markets. I mean, I always point out to people, there's no secret in Africa. Yes, we have, around 50 countries on the continent, but essentially what we're dealing with is 18 to 20 of those countries, which account for 80% of the continent's GDP. So, FDI flows go to where the biggest economies are, starting with South Africa, Egypt, and Nigeria, which account for 50% of Africa's GDP, and then into the other big, faster-growing regions, which will probably be East Africa, Kenya, Uganda, Tanzania, and maybe Ethiopia, for example, if it manages to push ahead with its privatization program. And then, of course, in West Africa, Ghana after the election, Cote d'Ivoire and Senegal will all be relatively fast-growing. In fact, Senegal will probably be one of the fastest-growing economies in the world next year as oil and gas production starts. So I don't think it's any secret where the money will flow. There's obviously some little complexities. For example, does money flow towards resource projects in some of the smaller countries? But beyond that, right. I don't think we should worry too much about where the money will come back from. This is the entry point, I would argue. The collapse of exchange rates means that assets, particularly in Egypt, Nigeria, and South Africa, begin to look cheap.
David, let's finish on oil because many analysts expecting there to be a surplus for oil. Who stands to benefit and potentially lose in this scenario? Nigeria is trying to be a powerhouse here. Where do you see this playing out? How do you see this playing out on the continent?
Yeah, I mean, it's interesting. Most forecasts do point to a weakening of the oil price, sometimes quite significantly. What I would say to you is that actually I don't think Nigeria, which historically would have suffered badly from a collapse in the oil price, will suffer so much this time. I think the move we've seen in the Naira means that Nigeria won't impact. But probably the region that will be impacted most is CMAX. So Central West Africa, places Cameroon, Gabon are going to have a difficult adjustment, followed by Angola, which could also have quite a difficult 2020. 2025 if the oil price was to fall significantly. But there's 2 points I would make about the oil price. The first is obviously there's winners from the oil price. Remember, there's 8 oil exporters in sub-Saharan Africa plus Algeria and in North Africa. So arguably, the point you would make is that the oil importers are winners. So East Africa is an oil importer. Okay, that will change going forward, but that would be a big winner.